Yesterday, the euro and the British pound attempted to hold steady at local lows, supported by stronger than expected data from the euro area. The Eurozone services PMI was revised up, but remained below the 50-point threshold, indicating contraction in activity. The composite PMI, combining activity in both the manufacturing and services sectors, rose to 47.6, well above market expectations. Against this background, the euro tried to recover, but then came under pressure from upbeat data on services activity in the US. The Institute for Supply Management said that its services PMI advanced, beating analysts' forecasts. Besides, the euro was weighed down by comments from ECB board member Isabel Schnabel. She noted a remarkable fall in inflation, which could take further interest rate hikes off the table. Her remarks were regarded as a dovish signal, which drove up rate cut expectations. Although ECB officials do not mention rate cuts next year, the futures market is betting on monetary policy easing as early as the first quarter of 2024. In this context, the euro is losing ground, dragging the British pound down. Likewise, sterling dipped after rebounding on yesterday's positive data on services activity in the UK. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes data on German factory orders and Eurozone retail sales for October. However, the euro is unlikely to gain strong momentum amid these reports. Britain is due to release data on activity in the construction sector. The UK construction PMI is expected to improve in November. Traders may also take notice of a speech by Bank of England Governor Andrew Bailey, which may back up sterling, thus limiting its bearish correction. Furthermore, Bundesbank President Joachim Nagel and Bundesbank Executive Board member Sabine Morderer are set to speak today. The focus of market participants will be on the ADP National Employment Report. The median forecast is for an increase to 130,000 jobs created in October from 113,000 in October. In case of gloomy statistics, the US dollar may come under pressure. According to the 1-hour chart, the euro-dollar pair is currently trading at around the low of 1.0780. The level of 1.0811 acts as resistance. A false breakout at 1.0780 will create a buy signal, thus driving the price up to 1.0811. In case of downbeat US statistics, the euro is expected to consolidate above this level and extend gains to 1.0838 and 1.0869. At the mark of 1.0869, I recommend going short on a rebound to catch an intraday correction of 25-30 pips. Short positions at 1.0811 and 1.0838 can be considered only amid a false breakout. In the event of strong data on the US jobs market, the greenback will most likely continue its bullish run against the risky assets. So one should not rush into long positions even despite such a significant bearish correction. Alternatively, if the price breaks below 1.0780, the euro is likely to plunge to 1.0752 and 1.0722. At the level of 1.0722, it would be a wise decision to go long on a rebound, counting on an intraday correction of 25-30 pips. Going long at 1.0752 and 1.0780 will be relevant only amid a false breakout. As for the British pound, a false breakout at 1.2616 following Bailey's speech inspiring dovish bets will make it possible to sell the pair with a view to bringing the price down to 1.2580. If the price breaks below this level and tests it from the bottom up, the volume of short positions will increase further. In this case, sterling will dip to 1.2545 and probably 1.2503 amid strong ADP numbers. At the level of 1.2503, traders are recommended to go long on a rebound to catch an intraday correction of 35-40 pips. Going long at 1.2580 and 1.2545 will be relevant only in the event of a false breakout. In a bull case scenario, buyers may regain control of the market following Bailey's statement and downbeat US statistics. If the price consolidates above 1.2616, a strong buy signal will be generated. Thus, the British currency will have a chance of rising to 1.2646 and 1.2682. At the mark of 1.2682, one can go short on a rebound, counting on a decline of 30-35 pips. Short positions at 1.2646 and 1.2616 can be opened only amid a false breakout. Best of luck.